Hello and welcome to Crypto Weeklies. In this video, we analyze when to accumulate Solana. None of the content financial advice. Let's get started. Right now, the price of Sol is at around $85. It's coming out of that range of resistance. The 20-week simple moving average for Sol has acted the resistance, the red line over here. Unlike other assets where price momentarily moved away from the 20-week simple moving average, broke out, and then now for example, over here, Bitcoin had that rally beyond the 20-week simple moving average as early as about mid-April 2026. Then couple of weeks of that pump above those levels, now coming back crashing at or near the 20-week simple moving average. Sol never went past the 20-week simple moving average resistance. That level for Sol was $93 as of today. Back in mid part of May or early part of May, the 20-week simple moving average was at around $96. It's a declining price moving average, as the price is consistently has been lower than the red line over here, which is the 20-week simple moving average. The price pushes that 20-week simple moving average down like a magnet. So unless something changes, the typical bear market for Sol, again, this is the second bear market for Sol. The 20-week simple moving average did prove a lot of as a significant resistance all the way from that January 2022 beginning of the bear market to the very end till about January 2023. One entire year spent below that 20-week simple moving average, and any time the price went near it, the 20-week simple moving average acted as a resistance and pulled the price beyond that price action to have a sharper correction as and when the price came near the 20-week simple moving average. This time around, again, something similar happened. Just some for Sol point to be noted is that instead of January of the bear market year, this time around the first crash below the 20-week simple moving average actually came in November 2025. So 1 year later for Sol would be somewhere close to November 2026 instead of the actual the last bear market performance, which improved in January 2023, which is typically a recovery year for crypto. The 1 year after the bear market year, again 2027 could be instead of that recovery starting in January 2027 per this model. Again, if per the correlation with the last bear market, this time around the recovery might start in November 2026 itself. So from here, that's about 5 to 6 months, depending on, again, now this is almost end of May, so June, July, August, then September and October, and then again November, the fifth month after that could be something similar in terms of the candle. You can see the same with respect to the monthly candles on here. This is not the regular candle, these are the Heikanashi candles or momentum based candles to identify the longer term momentum shift. This again from Jan 2022, the negativity started and ended almost 12 candles later in Jan 2023. This time around, again, the same phenomena, November 2025. Now we are at 1, 2, 3, 4, 5, 6 and 7th candle. So the last time the 7th candle came into play, the again excluding that FTX collapse, again ignoring that November December FTX collapse, the 7th candle was here, some 3, 6, and the 7th candle was almost after that panic scenario had already manifested in June 2022. So something similar happened this time this year also. Again in February 2026, there was this panic drop where Sol, again along with all major crypto assets, almost all major crypto assets had that panic drop in February time period. Coming to our own website, now that we have covered the technicals, again, the last technical analysis was that 200-week simple moving average, which is typically a bear market flag over here. Whenever the price or the line over here changes the color from blue to white, that's where the price is lower than the 200-week simple moving average. And for high quality assets, the top crypto assets, the 200 accumulation below the 200-week simple moving average, not the worst idea. Again, not financial advice. This is ETH, for example, over here, as and when it was this color of this line was in white color, that means below 200-week simple moving average, it was whenever this flag kind of entered for ETH, it was a great time to buy. Similarly for Bitcoin over here, typical bear market lows, again you can see 0.1, 0.2, 0.3. Now it hasn't happened in 2026 yet, but for Sol is a newer asset. It completed its first 200 week in January 2026 itself, and that completed in April 2025 itself, when that first correction to the 200 week simple moving average happened. Because it was in a bull market year, this line held as support, and then again until January 2026 this line continued to hold as support, and then changed into a bear market year, and then changed its color to white, and again started acting as a resistance in any major rally. Now our own website, cryptoweeklies.com, this is again all of content from here on is available for free on this website. This is my own website. We just launched a AI assistant. This is my own personal LLM trend on my own historical timestamps and historical transcripts. This is the third year for this YouTube channel. You can check out all of our videos over here instead of parsing through this 1200 videos and the transcript of those videos. These transcripts are fed to the LLM along with my own thoughts to come up with this non-financial advice assistant for Sol. So for example, over here, if we enter, give me everything related to Sol or Solana, let's say. So this scopes the alpha on that one. So for example, everything on Sol, it's currently in development. So yeah, so Solana up 10% in the last 24 hours, but again still has that volatility and the time weighted average price of about $23. So let's go to these individual models. The AI assistant had said that look forward to the time weighted average price model. So this model over here, the time weighted average price again did make some error at this point. The time weighted average price is at around $86, not $23. So let's check what's wrong with that suggestion at a later point. But for now, the time weighted average price model, again this is a 7-day time weighted average price. Maybe it's looking at some of the historical price points. Nonetheless, the time weighted average price model at this point is at around $86. The price is very close to the time weighted average price in the last bear market at or below the whenever the price was lower than the white line over here. That was a great DCA opportunity. Again, similar story at its initial phases in 2020 as well. That doesn't mean that the price cannot drop from over here. In the last bear market bottom, the price was almost 80% down from the time weighted average price at that point in time. The time weighted average price was roughly $50. The price at the bottom was $10. Right now, the time weighted average price is at $87. The price is at around $83 and change. You can see if we toggle the risk levels in such a way that the distribution zones are clearer and the accumulation zones are clearer. Risk level 1 and below, typically an accumulation territory for Sol. And at this point, Sol is in that accumulation territory. The distribution territory is anytime above risk level 7, 8 or 9, definitely at risk level 10. Again, typically those time periods are coincided with some of the euphoria phases in the asset class, wider asset class, typically above risk level 8 and 10. So how is this calculated? This looks at every single day at once, the average price of every single day, to inform what is the time weighted average price. That is value built across years worth of trading to measure not just the current price but the conviction over time rather than a temporary volatility. It takes a lot of significant momentum to shift the time weighted average price in an upward bias, like it did from 2021 where the price was essentially in an uptrend for almost one and a half year. And also similar thing, again you can see that the price did have a significant crash from that 2021 rally to the 2022 lows, but still the time weighted average price barely budged from $56 to $44 despite the price going from essentially $250 to $10. That means this model has the has the ability to digest that temporary volatility to identify what's the longer term value that is being created. Typically, when the risk levels are low enough, that means price is spending the market is spending a time at a level where essentially you are beating a clock and entering at a level where the market has spent a very little time, uh, historically speaking. Again, because it's a newer asset class, we are going with a average daily price. um, you can see for other assets as well, not just for Sol. These models do help identify the accumulation versus distribution zone. So for example, over here for ETH, again, as ETH is a relatively older asset than Sol, at or near time weighted average price is where typical bottoms occur. For Bitcoin, it's slightly different because Bitcoin is again multi-year asset. So every single bear market, the risk level kind of jumps one level up at the bottom. I'll show you just briefly. I know it's not related to Sol, but it's kind of important. So in 2015 bear market, 2014, 2015, risk level 1 was bottom. In 2018, risk level 2 was bottom. In 2022, risk level 3 was bottom. Maybe this time risk level 4 becomes bottom. But right now, the risk is at risk level 7 for Bitcoin. That's why, again, on our channel, if you have watched any Bitcoin related videos, I refer to this analysis quite a lot. Coming back to Sol, right now the overall composite risk for Sol accumulation is at around 0.33, so slightly outside of the accumulation zone, although the time weighted average price risk is significantly lower what we have seen in the past bear markets. Again, over here, if you look at the bear market bottoms analysis for Sol, you would see that the time weighted average price for Sol is at around $87, as we spoke over here, but the time weighted average price risk remains elevated at around 0.82. That's because previously in the previous market cycle bottom, at or near 80% correction on the time weighted average price was the market cycle bottom. So roughly speaking, if at the end of 2026 the time weighted average price, which grows at a snail's pace, time weighted average price goes to $100, 80% correction on $100 would be $20. I'm not saying that the Sol has to go to a $20 level. My base case in the bear market for Sol, the base bear case for Sol is at $45, which is roughly speaking 45% down from the current price action. That's the base case target. If there is the second half of 2026 proves to be anything like the second half of 2022, you can see from ROI perspective over here. And these, by the way, all of these charts are maintained at a daily level. So if you want to help the channel grow in terms of reach, please give a like and subscribe to help me keep motivated in developing all of these analytics. So this is 2026. At this point, negative ROI, negative 31%. Same time back in 2022. Again, I'm not saying the exact factorals or any fractals would be exactly matching, but the directionality, if let's say at the same time in 2022, ROI was negative 71%. It's now negative 31%, roughly 50% of the last bear market. At the end of the last bear market year, the ROI was negative 93%. A negative 93%, if you take a 50% haircut on that, it could be somewhere negative 45 to negative 43 to negative 47%, that range. For Sol, if let's say the yearly open for Sol, again, if we go by the yearly open, let's see, the best model to identify the yearly average price would be again at our own website over here. In the time weighted average price model itself, we do have that yearly open price at the yearly open at least at the average for January. The yearly open at January was at around, the average price was at around $125. Taking a 50% of 125 would be 62 to 62 to $63. That would be a 50% negative ROI at the end of the year 2026. If the bear market starts looking any more sinister than that, then we have that $45 panic case scenario as a forecast. Right now, the models that are keeping the risk levels elevated for Sol is this regression model that we have developed using its own mathematically derived fair value using polynomial regression function. It's a non-linear estimation of what fair value of Sol is. Right now, the fair value per this model is at around close to $100. It's kind of undervalued with respect to this fair value, but you can see that at the end of the bear market years, it just does not go lower than the fair value. It typically touches the lower one band, which is the one standard deviation residual, which again coincides at around $48 at this point. So if Sol were to go down to $45 to $48, that would be confluent with that typical bear market drawdowns for Sol. Again, I'm not saying that it has to go to lower band 2 or 3 like it did at the end of the last bear market. I know this time around the bullishness was less. So for example, the peak was lower band, so upper band 1 instead of upper band 3, which was the 2021 peak. Maybe instead of lower band 2 being the 2022 bottom, again as low as about, it never went to lower band 3, lower band 2 was the bottom. Maybe the lower band 1 becomes the bottom in 2026, or slightly above that lower band 1, which would be close enough to $50 level for Sol. Another model that needs to be discussed is that machine learning based time series analysis model. This model is trained on the weekly price action since the token launch. The machine learning model forecasts 3 scenarios based on standard deviations and confidence levels. This model uses seasonal ARIMA and LSTM based machine learning models to forecast what could be a theoretical non-panic bear market bottom for Sol. Again, if 2 to 3 months, again from almost end May to mid August, if we don't know the exact 3 months when they will occur, but if let's say there are 3 more months of bearishness from here, the floor for Sol is at around $45 to $47 per these models. If there is a major counter trend rally, which does not look likely at this point in the month of June, the ceiling for that rally is at that yearly open of about $125. And again, that makes sense, that because typically in the bear market years, Sol does not spend any time above the, again this is Bitcoin, but if we go back to Sol over here, 2026, the ROI at the first couple of weeks was positive for 15%. But again, as and when, again, if we go into the later half of that year of the bear market year, then the ROI starts having that steeper decline. With all of that, as we discussed the estimated bear market bottoms, let's conclude on a hopeful note. Estimated bull case target for the next bull run is at around $830, which from here is about, roughly speaking, a 9 to 10x. This model just flips the existing models into, rather than looking for a bear market bottom, of euphoria or non-euphoria peak for Sol in the next bull run. With that, hope you enjoyed the content. If you did, please give a like and subscribe. I know this Sol predictor model is still being under development. Let's look at it probably in our next video for a deeper dive. With all of that, hope you enjoyed the content. If you did, please give a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.